Hi guys, a very good evening to all of you. Hopefully my screen is visible, right? So today we are left out with Lunaco, which was tested in a March-June 2022 paper. We are left out with the final two requirements, which is B and C, right? So this session would be quite short because we'll be only focusing on B and C. And after that, once we conclude, if you all have any doubts, right, you all could ask. Okay. Based on that, we could extend our session. Okay. So if that is so, shall we directly move on to the question? Hopefully, I would not mind it, right? So, what does the examiner need us to do in requirement number B, which is tested for 7 marks, is right? He wants us to discuss plus calculate, right? So, there are two requirements given here. Okay, there are two requirements given. One is he wants us to show the accounting treatment of investment in Rocket Co, right? As well as as they have done a sale of property, right? So you need to discuss with appropriate calculations of how do you do these two treatments. Okay. If you have done that, the entire 7 marks is yours. Be confident. Don't worry. Right? Don't worry. You all are able to get that 7 marks if you all majorly focus on these two requirements. Okay. So if that is so, shall we go and read on our requirement? Okay. This would be our requirement for the day. So they have gone and purchased Rocket Co. on 1st April 2004, right? That would be from the current financial year, that would be 2 years back. Okay. 2 years back, they have gone and purchased Rocket Co. Okay. So this is a joint arrangement. Okay. When you all remember joint arrangement, uh, b- uh, you all should remember, right? Or something should be triggering into your heads that it is related to IFRS 11, right? This is related to IFRS 11. Okay. This is related to IFRS 11. Okay. So IFRS 11 says that joint arrangement can be broken down, split into two, right? One could be a joint venture. Okay. One could be a joint venture. Another one could be joint operations, right? In this, the examiner is specifically giving us that this is a joint venture, right? So we don't need to go through the trouble of finding out whether it's joint venture or not. Okay. And also he's giving another point here. See, for the newly created entity. Hopefully I'll remember, joint venture creates a new business, right? It's not like joint operations. Joint operations continues with the existing entity, but joint venture is something that is totally different, right? Joint ventures will create a new entity, right? With the unanimous consent, with something known as unanimous consent. You all would have studied this, right? If you all remember, fine. But for the people who are new, you all can go and refer IFRS 11, which is a simple standard. Okay. But it's an important standard, prominent. Make sure that you are going to learn. Okay. So you all have gone and acquired 50%, right? 50% means anything that is less than 51%. Anything that is less than 51% will be known as an associate. Okay. You all are going and purchasing that associate for $6 million in cash. Right? You all have paid 6 million, and in return, you all are getting 50% of equity, right? Of that rocket company. You all are getting 50% of equity of that rocket company. Right? That is all you all need to know in relation to your very first paragraph of your third exhibit. Right? That is all you all need to know in relation to your very first paragraph. Okay. So now let me take another color pen. Okay, here it is. Rocket Co has earned profit of 73,450 was for the financial year of 2005, and 126,980 was for the financial year 31st March 2006. Okay. Well, I would like to ask from y'all, right? And I would like to request y'all to use a bit of thinking, right? You all need to place a bit of thinking in this part. Normally, examiner has a habit of giving retained earnings, right? Retained earnings, which would be part of your net asset of the investment in Rocket Co. Right? Can you see here? this has been purchased on 1st April 2004, right? It was not purchased during the mid-year. It was not purchased during the year end. It was purchased during the beginning of the year, right? But despite you purchasing it on the beginning of the year, right? What is happening is, rather than showing these as retained earnings, right? You all know retained earnings. What is retained earnings? Retained earnings is reserve, right? A reserve that includes all the entire cumulative profits. It includes all the cumulative profits for the year. So if that is so, why didn't they not mention this together? That means, why didn't they include 73,450 plus 126,980? And they should have showed as retained earnings at 31st March 2006, right? Because simply you all did not buy it during the mid-year, so you all don't need to even what we call do split accounting, right? You all don't need to do anything proportionate. There is nothing called proportionate because you all have used it for the entire year, right? That entire profits is for the entire year. Okay. But why examiner is doing it is, like, he likes to twist it a bit. He likes to make sure that you all get confused and you all fall into the wrong track. Don't worry, this is part of the examiner's pattern, right? Be confident, you all will be able to do this, right? Always be confident is the key of success. Okay. And after that, finally what is happening is, additionally Rocket Co paid dividends. Okay. For who? For Luna Co, right? Luna Co is part of the group. Okay, any intra-group dividends is not allowed. Hopefully, all know, right? Any intra-group dividends is not allowed. Obviously, right? It's not allowed at all. So they have paid 15,000 each. So 15,000 is going for Lunaco, and the other one is for other venture. Okay, there is another venture, obviously 50-50, right? So for Lunaco, they are paying 15,000 as well as they're paying for the other venture. No problem with other venture. Regardless of you pay dividends or not, we have no issues, right? But any group dividends you should not include in your investments, right? So this is it, right? This is all related to your investment in associate, right? The final paragraph is about the disposal of property. When we come to that particular point, let us look into that, right? Till then till then till then what we could do is, we could go and first look into how examiner is allocating the 7 mark, right? So what he's doing is, out of the 7 marks, 3 marks is being allocated for your calculations, okay? And remaining 4 marks is for your explanation, but that is also again being subdivided. Why? Because you all need to explain two parts. You all need to explain. You all need to explain 2 marks for investment in our rocket, and 2 marks explanation is given for sale of property, right? If you all include that, the 4 mark is all yours, right? Okay. Okay. So let me remove this. Okay. So first of all, you all are buying 50% of joint venture, right? They are telling that this is, you all are acquiring 50%. Give me a minute. Let me go back to the slide. You all are acquiring 50%, right? So it is less than 51%. You all could go, you all will have a confusion. Should I show it as associate or should I show it as joint venture? In this, examiner is clearly mentioning that this is joint venture, right? So you all don't have any problem. It's a joint venture. Okay, it's a joint venture. So if that is a joint venture, what you all need to do is, you all need to explain a general point. You all need to explain a general point. What that would be is, if it's a joint venture, if it is a joint venture, right? What method are you supposed to use? What method are you supposed to use? Right, let me give a minute or so. Can one of you all tell me what is the exact method that you all are supposed to use? If it's a joint venture or if it's an associate, right? Both, I'm giving you a common hint. Both of them use the same method. Both of them use the same method. We have done a similar question previously. Yeah, well, yeah, yeah. You're close, you're close. But it is not IFRS 28, it's IAS 28, right? It's IAS 28. There's nothing called, I mean, we have not come across any standard known as IFRS 28. It's IAS 28. Yeah. Yeah. IAS 28. But anyways, no issues. You made an attempt, right? So no problem. We are supposed to use IAS 28, right? We are supposed to use IAS 28, right? Which is known as equity method of accounting. Okay, which is known as equity method of accounting. So if you include these points, if it's a joint venture, right, since this is a particular joint venture, right, you are supposed to use equity method for accounting, right? Equity method is IAS 28, right? Investment in associates, joint ventures is IAS 28, right? That would be used for the group accounting, right? Will be used in that for the group accounting. That is all you all need to mention in terms of what type of accounting you're supposed to choose, right? After that, the second point would be, okay, the second point would be in my group statement of financial position, okay, in my group statement of financial position, I will show this as a separate line, okay, as a separate line under non-current assets, under non-current assets. So here it is. Here it is. Look at this. Look at this. I mean, this is a small extract of my SOFP, right? I just wanted to show you all how it's being presented, right? Under non-current assets, you all can see PPE and different PPE, say land and different non-current assets, right? Then after it, you all should leave a particular line, and after that, you all need to record investment in joint ventures, right? This is how you all do the presentation, right? You all need to. It will be shown as a separate line. That is what I have disclosed here in words. Okay, that's what I have disclosed in words. See, and another additional point that I would like to give you all is suppose in the exams, right? Suppose in the real exams, if you all don't know how to answer, right? Or if you all don't know how to calculate, right? If you what you all need to do is what I simply request you all to do is make sure that you all identify at least the standard and write the general principles of the standard, right? Just write, just beat around the bush, right? You all might be able to get at least minimum 2 marks to 2.5 marks for giving general definitions, right? For giving general definitions if you're not able to identify, right? So that is what I also am doing here. That is what I am also doing here, right? I just mentioned this point as well as here, see, this is a general point that I'm giving. Here it is. This is a general point I'm giving. Wait, I'll show you. In order to find out the investment value, right, at the reporting date, we need to simply take the cost, right? Here it is. The cost, which is a cash investment, plus the net assets, right? Which is only the retained earning reserve because there were no any other reserves, right? There was nothing called share. Did we see any share capital here? Did we see any share capital upward adjustment? No, right? So only they told that retained earnings in terms of profit exists, right? So that is why I need to show cost plus the net assets, right? And also I need to remove, always understand, y'all are not supposed to bring any intra-group dividends, right? Y'all are not supposed to bring any intra-group dividends. I'll show you all the reason. I'll show you all the reason why. I'll show you all the reason why. Okay, from both investment in associate. Okay. So what I told was, I just simply mentioned after you calculate the joint venture, you need to present it as a single line item under non-current asset. And after that, I just told the way of you calculating this. The way of you calculating this is simply mentioned here, right? Is simply mentioned here. Okay, simply mentioned here. Now, before moving on to the third point, which would be the final point, right? I would like to go to the calculations, right? I would like to go to the calculation, which is quite easy. Okay, it's quite easy. But anyways, let me do it with you all for your understanding. Okay. So first of all, what you all need to know, in exchange of 50%, right? You all paid 6 million of cash, right? For 50% of ownership, 50% of ownership, right? You all paid 6 million of cash, right? And under the net assets, right? Under the net assets, do you all have any other reserves? Apart from the retained earnings, do you all have any other reserves apart from the retained earnings? No, right? They have not given ordinary share capital, upward adjustment, or general reserve. Nothing is being given. So you all only need to stick with retained earnings in terms of profit, right? Profit for the year of 2005 and 2006, you all need to give. Okay, how much is that? 2005 is 73,450, right? 2006 would be 126,980. 126,980. But small problem. Even though both of these entire profits are for the year, right, are for 2 financial years, right, and even though you all have been existing for the entire year, right, for the entire both financial year, you all have been existing. Here, see, it's starting from the 1st April 2005 or 4, right? You all have been there for the entire financial year. For entire both financial years, you all have been there. But you all only have partnership of 50%. So this entire profit is not yours. This entire profit is not yours. Out of this 73,450, which was the profit for the year end to the 2005, you will only get 50%. You will only get 50%. The same thing applies for 2006 as well. Out of the 126,980, which was the profit for the year ended 2006, you all will be only getting 50% of 126,980. Why? Simply because you all only had 50%, right? You all only had 50%, even though you all had that full profits for the entire year, right? You all only had 50% of ownership. Because of that, only you all need to apportion. You all need to get the appropriate share of profits, right? You want to get the exact share of profits. Okay. And also you need to remove the 15,000, right? You need to remove the 15,000 uh intra-group dividends, right? Intra-group dividends is not allowed at all, right? So you need to remove it. You need to remove it. After that, you will be recording something known as investment in sorry, joint venture, right? At the reporting date. At the reporting date. Okay, at the reporting date would be how much do you need to record? So the reporting date is, guys, give me a minute. Reporting date is 31st March 2006. Okay, let me mention that also. Sorry, 31st March 2006. Right? At this date, how much will be my investment in joint venture? How much will be my investment in joint venture? It would be the addition of all this, right? It would be the addition of cost plus the net assets minus any intra-group dividends, right? It would give you $6,085,215, right? It would give you this amount. Okay. This is the amount. This is the amount that you all need to be presenting under investment in joint ventures, right? Simply this is how you are presenting. This is how you are presenting. Okay. Now let me give you all the logical explanation. Let me give you all the logical explanation on why am I removing my dividends, right? Why am I removing my dividends? Sorry. Why am I removing my dividends, which is an intra-group? Well, let me take it as a story. I need to take it as a story. Okay. What happens is, what happens is, what happens is, okay. Guys, give me a minute. My laptop is running out of charge. I need to plug in. Give me a minute. Sorry, I have a very bad habit. I don't put my lap for a full charge. So it's always keeping on running off. Okay, fine. Where are we? Okay. I was here, right? So I wanted to tell y'all, why do I need to remove, why do I need to remove something that is known as uh, intra-group dividends? Why do I need to remove? Well, there is a certain reason. Well, there's a certain reason. I want to explain it like a story, right? Let me keep it quite simple for y'all. Okay. Here, see. Rocket Co. Rocket Co. Who is Rocket Co? he's a joint venture, right? He's a joint venture and he is giving Lunaco $15,000, right, as dividend income, right? Because Lunaco invested, he is giving 15,000 as dividend income. So in Lunaco's individual financial statements, this will be recorded as a dividend income, right? This should be recorded as a dividend income in your individual financial statements of Luna. Okay, it would be recorded in indi, individual financial statement of Lunaco, right? 15K of dividend will be recorded as income, right? This is totally accepted. That's no problem at all. In your individual statement, you can record 15,000, which is received by Rocket Co, who's an investment in joint venture, right? But group does not allow it. Group does not allow it, right? Why doesn't group allow? Why are you removing dividend income? See, because can you see when was this given? This dividend was given, right? This dividend was given in your current financial year, which is to 31st March 2006, which is profit of 126,980, right? 126,980. Okay, 126,980. This is your current year profits, right? This is your current year profits, right? Right? This is your current year profits from your individual financial statements, right? So this 126,980, this 126,980 already includes your dividends, already includes your dividends. Or in other terms, this would have been already added. This would have been already added. So when you all are coming to group accounting, when you all are coming to group perspective, you all need to remove that, right? This 126,980, right, already has that 15,000 which has been added. Why? Because it was an individual financial statement. So it would have been plus, even it initially it would have been plus. So what you all need to do, by y'all minusing it off or by y'all removing it here, plus and minus become zero. Plus and minus become zero, right? Let me draw it also for y'all. Let me draw it for y'all. This includes your 15,000, right? This includes your 15,000. So now I need to remove it. Why? Because we are now doing in group accounting. We are now doing in something called as group accounting. So I need to remove. So earlier this would have been plus. If I minus this, right? If I minus this, if I minus this, plus and minus would be zero. The impact would turn out to be zero, right? Impact would turn out to be zero. Okay, that is why we are reviewing. That's why I've mentioned here special point. If you want, I'll bold it also for all. If you all have the time, please try to read this, right? Please try to read these special points. Okay. Pause it, pause the videos, right? On your Google Classroom, pause the videos and watch this. Okay. Since when we show the share of profit, this will include the income. So if you again go and show this will be as double counting. So remove them, right? That is why. Once you remove, you will be able to show zero impact. Zero impact plus will become plus and minus will become equals to zero, right? This is how you all need to show it. This is all you all need to tell. Okay, finally, last one in terms of that, is this particular accounts, right? These particular accounts, they have only told consolidated financial statements, right? They did not specifically mention SOFP or SOPL, right? So we showed the impact of statement of financial position, right? We are left out with the group SOPL, right? We need to show an impact of that as well, right? What happens is, guys, normally when you all invest in joint ventures or associates, right, they will normally tend to give you all something known as share of profits, right? They will give you all something known as share of profits, right? Share of profits, which is in this terms we have taken only 50%, right? we will be getting share of profits, which is 50%, right? Because we only have 50% of share. Okay. So how much would be my share of profits? Here it is. This amount would be your share of profits. You all invested 50%, right? You all invested 50%. For the current financial year, Rocketco made 126,980. Rocketco made 126,980. Out of that, 50% is yours, right? That is known as, that would be known as share of joint venture, right? Or what I would say is share of profits from joint venture, right? If you all include this, you all will be able to get the entire 3 marks, okay? Entire three, but maximum they'll be giving only 2. So you all could choose which you all need to include, which you all need to omit. It's up to you all, totally up to you all, right? Whatever you all feel favorable, you all could start discussing, right? And finally, hopefully, first let me clear it off. Have you all understood this? Have you all understood this before I move on to the other final one? I need to get a clear confirmation that you all have understood. If you all have not, there is no point of me moving to the next requirement. Yeah. Yeah, yeah. So where you all will go wrong is obviously first wrong you all will go is you all will forget to mention the 50%, right? You all will be forgetting to take the profits for 50%. The second one is you all be able to manage the dividends, right? Most of you all might be knowing, but you all don't know the logic, right? You all don't know the logic, so that is why it's mentioned here 15,000. All right. In terms of discussion, if you all want, I would say that you all could finish off with first and 2 points, right? If you all want, you all could include SOPL, right? If you all don't want, you all don't need to, right? So, okay. So you want me to show how does it affect my SOPL, right? In your statement of profit or loss, you all will be showing under income, right? Under under other income, right? Under other income, you all will be showing share of profit from joint venture. This is all you all need to show. This is how you all need to show, right? This is how you are present in your statement of group statement of profit or loss. Okay, all clear, right? Is it clear now? Okay, okay. Now we are left out with our last this one, right? We need to show calculations as well as we need to discuss. Fine. Let us go and do it. Let us go and do it. I know this might be looking messy, right? This is my way of doing the question, but I would give you all the entire freedom and liberty, right? You all could, people who like to highlight, you all could highlight. People who like to use the drawing pad, you all could use, right? Totally up to you all. But this is my way of doing it, right? On 31st March, right, Lunaco transferred a property to Rocketco. So that means parent is transferring to subsidiary. Okay, this is a parent to subsidiary, right? Parent to not subsidiary, sorry, joint venture. Parent to joint venture. This is not parent to subsidiary. This is parent to joint venture, right? For a proceeds of how much y'all are getting? Y'all are selling an asset and y'all are getting 8 million. Fine, y'all are getting cash of 8 million, right? Y'all are getting cash of 8 million. So that will go and debit your bank, right? 8 million will be debiting your bank, right? And this 8 million, this 8 million, right, is to be equal to the market value, right? Give me a minute. My cursor is shivering a lot. Give me. This is equal to market value. This is equal to market value. Why are they saying that it is equal to market value? Will you all see? Normally, what happens is when you all are running a group, right? These people who are working part of these groups are quite manipulative, right? They are manipulative is because they want to show profits. right? They want to show profits, right? Or they want to reduce the taxes, right? So what they could do is they would, play around, they would manipulate around the figures in your P&L, right? So why examiner personally bought this? See, when you're selling from a group perspective, right? Normally you will be trying to make profits, right? For your individual divisions, you will be trying to make profits for your individual divisions, right? When you all are selling at the market value, right? When you all are selling at the market fair value, right? You all cannot manipulate. Why? This market fair value is determined not by the company, right? This is not determined by the company. This is determined by the entire market force. Are you all getting it? Are you all getting it? Let me again explain. Okay, let me again explain. That 8 million, right, is being sold by Luna to Rocket. Both are part of your group. Okay, that's both are part of your group. Now, because you all are part of your group, you all can create your manipulative losses, manipulative profits, right? You have to create. To avoid that, what we would do is we would sell it at a market rate, right? Who determines the market rate? Is it your company? Is it the group? No, the group does not determine market value. The market value is determined by the entire market force, right? It is determined by the entire market force. They will discern. So that is why this is a genuine transaction. This is a genuine transaction, right? This is a genuine transaction, guys. This is not manipulative. If it's manipulative, I would have told that this is a what do you call? This is a fake transaction or manipulative transaction, right? But this is 100% authentic. Why? You're selling at the market value. So the market value is 8 million for that asset, right? That's all you need to know. The market value is 8 million of that asset. Here comes the game changer. Here comes the change. But in the financial statements of Lunaco, you all have gone and recorded 10 million, right? The carrying value is 10 million. The carrying value is 10 million. Carrying value is 10 million. Can you all remember? Can you all remember? This should trigger one standard. This should trigger one standard which is known as IAS 36. IAS 36. Whenever your market value is less than the fair value. Sorry. Whenever your market value is less than the carrying value, right? It indicates impairment. It is an indication of impairment. It is an indication of impairment. When your fair value is less than the carrying value of the organization, it is an indicator of impairment. Hopefully, I'll remember. So, you all can speak about that. You all can speak about that. You see? You all can speak about that. This is an indicator of impairment, right? Why is this an indicator of impairment? Why is this an indicator of impairment? See, because your carrying value is greater than the fair value. Okay, carrying value is greater than the fair value, right? Fair value. Let me add another point. Fair. This seems to be genuine since the fair value is determined by market forces other than 72. Right? This is why. Can you see here? This is the calculation, guys. This is the calculation. Right? This is the calculation. How does this calculation is formed? So when your fair value is 8 million, right, at market rate, right, at market, your carrying value is 10 million, right? So the difference is impairment. The difference is impairment, which is 2, right? From 10 to minus 8 would give you 2 million. Would give you 2 million. This is your impairment loss. This is your impairment loss. So what would be the double entry? The double entry would be quite simple, right? The double entry would be quite simple, right? Bank account debit, PPE, because you're disposing, would be disposed at carrying value. The loss you all need to show as 2 million, right? If you include this, You will get that 1 mark. Okay. In case, in case, oh well, I would not say this is not needed for now. Oh no, let me explain this also. This is needed for. This is needed for. This is needed for. Suppose in case if this was an artificial loss means rather than we record it at market value, we record it at the value that is given by the group. That is given by the group, right? And you create a loss. You create a loss. What you need to do is rather than recording the entire 100% loss in group accounts, what you all could do is you all could split it, right? You all could show 1 million as loss and the other 1 million as impairment. How you all could show how that would how would you all assume it? 2 million is the total loss, right? At 50%, right? Group will only bear the loss of 50%, which is only 1 million is the loss. The remaining you all be showing as impairment, right? From 2 you minus this 1, you all be showing as impairment, right? This is how they manipulate. This is how they manipulate. Just because they create an artificial loss. But since this is genuine, since this loss is genuine, right? You all don't need to do any of these splits, right? It is not needed at all. Okay, you all don't need to do any of these splits. It is not needed at all. Okay, it is not needed at all. All you need to know is this. All you need to know is this, right? Along with the along with this, right? This is all you need to know. Finally, we are left off with last explanation, right? What would that be? Is hopefully do you all remember? Does anyone know? Does anyone know something known as Does anyone know something known as what would I say? Okay, hopefully I'll remember when y'all buy parent to subsidiary, parent or when y'all have control, right? Control means y'all have something known as subsidiary. Y'all are subsidiary, right? When y'all are subsidiary only, y'all are allowed to consolidate, right? Consolidate, right? When y'all are subsidiary only or when y'all have control only, y'all are required to consolidate. Consolidate means what? Y'all can combine in terms of profit and loss, in terms of SOFP, y'all can combine. But since if it's an associate, less than 51%, more than 20%, if it's a joint venture, which is less than 51%, more than 20%, you all don't need to consolidate. You all don't need to consolidate. That is what I'm mentioning here. Even though these are within the group, right? Even though these are within the group, we are not required to remove the intra-group asset and liability, right? Or simply what I would say is, we do not need to consolidate, right? We do not need to consolidate. Why aren't we consolidating? Because obviously we are not part of, we don't have control, right? If we only have subsidiary, we are needed to consolidate. When we are not the subsidiary, we don't need to consolidate. Simple as it is, right? This is all that is related to this particular question. This is all that is related to this particular question, right? This is all that is related to this particular question of 7 marks. Take your time, right? I'll give you 2 minutes. Just have a look. Have a look, right? Have a look. So the people who want to take screenshot, you all could take screenshots. No issues. Well, no, no. That recording, yeah, sorry. I'll have to check with them. So that recording, we have uploaded. I mean, they had not uploaded, but we did, right? We did that ethical question number 2, which was Jassy or Qatar or something. I can't remember exactly. Right over. I'll tell them to upload that also on Friday. I'll tell them to upload that also on Friday. Okay. This is all you all need to know in terms of your way of explaining, right? You all don't need to explain like this, right? You all don't need to follow my answers. You all don't need to follow the examiner's answers. What you all need to do is write it in your own way. Write it in your own way, right? Don't worry, examiner here, see, he gives. As long as it's a valid discussion, you will get 1 mark, right? So you all don't need to worry. You all will be getting that 1 mark. Okay. If that is so, we are left off with our very final question. We are left off with our very final question, which would be, right? Which would be, they want me to discuss, they want me to discuss, they want me to discuss, right? Whether the acquisition of Eclipco, they have gone and bought some company, should be treated as business combination, right? Business combination, which is IFRS 3. Okay. Uh, for the people who have studied or for the people who have gone through the Google recordings, right? The Google Classroom recordings, we have uploaded IFRS 3. Make sure that you all watch it. For the people who have not watched, right? On YouTube, people who are fresh, who have not watched, before attempting this question, please go and read IFRS 3. All right, or simply what you all could do is before attempting this question, go and read IFRS 3. It's about 3 pages, I would say. It's about 3 pages in Kaplan and 1 slide in study text, study hub, sorry. Any of that you all could use, right? And if you all want to use, let me know, I'll share it. You all could use that and you all could know what is IFRS 3, right? IFRS 3 is simply, let me simply tell you, IFRS 3 is when when two businesses or whatever say, let me keep it even more simple. When one business acquires another business control, right? When A business acquires B business's control, right? Or when Mercedes Benz acquires BMW's entire control, right? That is known as business combination. When one business combined with the other, right? It's quite simple, right? It's quite simple, right? Examiner specifically wants us to mention your answer should consider whether the skills and expertise, whether the skills and expertise of the team of scientists can be recognized as a separate identifiable asset, right? So here also he's giving you all two requirements. He's giving all two requirements, right? One requirement is whether you all need to confirm if it is a business combination, right? Number two would be he wants you all to tell whether skills are asset or not. This is all he needs y'all to do. This is all he needs y'all to do, right? This is all he needs y'all to do. If y'all do that, y'all will get the 6 months, right? If y'all do that, y'all will get the 6 months. Okay. Okay. So let me read off the final exhibit, guys. Let me read off the final exhibit. Hopefully, I'm not fast. Okay. Let me know if I'm going fast. Let me know if I'm going slow. Right. We could adjust. We could adjust according to your own way. Okay. So let me take another color. Okay, blue. Eclipco is an entity with sole purpose of producing new medicine, right? So what does Eclipco do is, right? They might be producing some vaccines, right? For corona, for COVID, right? For malaria, different types of the sun. These people are specializing in that, right? There's for various diseases, they are producing vaccines, right? They have a secured license. They have a secured license, right? Secured license. They have a secured license. Okay. They have a secured license. Okay. They have a secured license to do the following successful initial trials. Okay. Wait, I will tell you all why am I marking it red. Wait, I'll tell you all why am I marking it red. Don't worry, I'll tell you. I'll tell you. Okay. I'll tell you. Let me read off the paragraph so that I'll be able to explain all at once. Right. Eclipco employees consist of highly skilled team of scientists. Okay, highly skilled team of scientists. Highly skilled team of scientists. So obviously, right, y'all are producing new medicines which the entire world has never been looked into, or which the entire world has this medicine has not been discovered by any of us, right? So y'all need some good skilled scientists, right? So that they with their help, y'all are able to find out or y'all are able to find out new medicines. Okay. There is also a small support team, right, who carry out various administrative and accounting functions. Okay, okay. Apart from the skilled laborers or skilled scientists, not laborers, scientists, there is another function, right? That function is administrative. There are administrative staff, right? There is administrative staff, like such as the receptionist. There is an accountant, right? All of them exist. Okay, and also, also, clinical tests undertaken by the team of scientists have been extremely encouraging, right? So I guess they would have given positive results, right? And it's expected that the medicine will be on market sometime within next year. Okay, sometime within next year. Sometime within next year. Okay. Now for these ones which I have marked in red, right? I will start writing. After I start writing, I will tell you all why these red mark or why these red markings are important, right? Why these red markings are important. First of all, first of all, first of all, look at this. Examiner wanted me to discuss something about IFRS 3, right? Business combination. Examiner wanted me to discuss about business combination. Well, I would go and write a general point about business combination. What is business combination? What is business combination? I'll tell him. Okay, here it is. Here it is. IFRS 3 states that business combination is when, is when one or more business, right? One or more business, okay, jointly gets control over the other business, right? You all need to have joint ownership. You all need to have joint ownership. For example, it can be Mercedes Benz plus Audi buying Benz. Sorry, Mercedes Benz plus Audi buying BMW, right? There should be either one or two businesses getting together and buying or getting the control of another business, right? Of another business, right? Of another business. Okay. Also, what I would say, if it's a business, I would, this is not needed, but since I want to write it, I would say, what is a business? A business is obviously any economic activity, right? Business is any economic activity that is done with the intention, right? That is done with the intention of getting shareholder returns. Obviously, right? We do business for profits. We do businesses for profits. No one's going to want to do business, right? So what I would say, I would start defining what is IFRS 3, right? Because it has a component named as business, I need to explain what is a business, right? I need to explain what is a business. Okay. Okay. Now, finally, second part would be IFRS 3 business combination has given us some criteria, guys. I will say some conditions, right? They have given us some conditions, right? If y'all need to make sure that this is y'all are purchasing a business, right? If y'all are needing to show that y'all are purchasing a business or acquiring a business, if y'all are purchasing a legitimate, or if y'all are acquiring a business, right? Y'all need to meet a criteria. That criteria is known as input dash 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 process dash 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 output, right? It should be that business combination should have an input, it should have a process, as well as it should have an output, right? It should have an output. For this one example would be, for this one example would be, right? For this one example would be, I would take clothing industry, right? Let me take clothing industry. Give me another 20 minutes, we're done, right? Give me another 20 minutes, we're done. Clothing industry. Clothing industry's input would be, I would say, raw material would be, what do you call, cotton, right? You all use cotton, right? Uh, you all use a machine, okay, that is which is a processed, a highly automated machine, and that would give you all t-shirt, right? Can you see there is an input, there is a process, and finally there is an output that is being generated, right? If all these three are there only, it is known as a business, right? It is known as business. If input and process are not there, they are simply called as, simply what you all do is that investment is called as you all are purchasing another asset. Okay, let me again repeat it. If you all need to consider this as a business, right? When you all are paying money, when you all are paying money, right? If you all need to consider that money that you all have been paid is for the acquisition or if for the purchase of a business, right? That business needs to have something called input, process, output, right? It needs to have all three of this, right? The example would be your clothing industry. An example would be your clothing industry, which has input, which is cotton, machine, and a t-shirt, right? Another one I would say is uh another one I would say is okay, take the car industry. Car industry also has an input, has a separate process, it will produce outputs, right? The input would be you all use LED lights, right? LED light is part of your input. Process is you all use highly automated belts. You all use highly automated belts, right? You all would have seen these conveyor belts, right? That is the process. Output would be you all are producing cars. You all see the new Audi cars, right? It has this that what you call there is this light, right? It produces a car. Okay. So this is what if you all need to know if it's a business, it needs to have input, process, output. That is what I mentioned here. In order to ensure if they are purchasing a business, right? If you all are purchasing a business or acquiring a business, right? If I need to show that this is an acquiring a business, right? They must have input, process, and an output, right? You all need to have all three. You all need to have all three. Okay. But however, outputs are not compulsory. Okay. Outputs are not compulsory. Why I would say this is, wait, I'll come to that point as well. I'll come to that point as well. Hopefully I'll remember. Hopefully, does any of y'all know, right? There are some businesses, right? It takes a bit of time to create outputs, right? It takes a time to create outputs, right? Business that does not have output, right? For example, this very own business, right? Look at this. They produce medicines, right? Medicines. Do you all think that I can produce a successful medicine within a year or within 2 years? No, right? I have to take multiple trials that has to pass through government. After government has to give us approval. After we'll be testing it on the chimpanzees, monkeys, rabbits. After finally only that will be given to the humans, right? So sometimes uh these kinds of businesses, right, which is known as farm pharmacies, right? Pharmacies or pharmaceutical products, they take a long time. They take a vast period to get out the outputs, right? So that is why I'm telling. However, the output is not compulsory, right? Because there are certain industries that it takes very long time to create their own tablets, right? That is, for example, if you are take these pharmaceutical companies, they take very long time to produce tablets. Why? It's a huge process, guys. It's a huge process. It's not like producing a car. A car can be produced within an hour or so if you all have proper methods, proper processes, right? But pharmaceutical medicines, insulins, uh, and all those sorts, they would take lot of time to produce, right? So that is why, however, output is not compulsory, but input and a process is always compulsory, right? You all need to ensure that you all have inputs, right? And you all need to have you all need to have processes, right? Even the output is not compulsory for certain organizations. You all need to have input and process for all the organizations, right? You all need to have inputs and processes for all the organizations. Output is not necessary. Why? There are certain industries that are finding it difficult to produce outputs. Okay, so here it is another point, right? I will go and mention what is an input, right? Obviously, input is the ability to convert inputs into outputs, right? Using the resources and effective process, right? This is the definition of input. If you all need, you all can write. If you all need, you all can write, right? Otherwise, you all can leave. No problem, right? Now, now, what is a process? What is a process? Here it is. Here it is. This is an indication of process. Successful initial trials. Successful initial trials is an indication of process, right? Successful initial trial is an indication of process, right? Successful initial trials, right? What do you mean by process, guys? What do you mean by process? It's a set of steps, right? It's a set of steps. For example, first of all, you all need to produce it. The production will be transferred to your marketing department, right? Sorry, the packaging department. The packaging department would transfer to the marketing department. Marketing department would do the sales and that is right. After that, it finally transferred to the customer. Can you see we are going through step by step processes? So when you all do successful trials, right? Trial is not a one step scenario, guys. Trial, you all will be doing multiples. So I told you all the chimpanzee example, right? First of all, I would create the medicine, right? I would initially test it on the chimpanzee, right? I would test it on a monkey, right? That is my first set of trial. After that, I'll be going and testing it on a rabbit or a rat, right? After that, finally only I'll be testing it on a, what do you call this, on the humans, right? Finally. So that is why we can conclude that there is a process as well, right? There is a process as well, right? First, I would test it. First, I would take the injection or the medicine, the newly development drug, on the monkey. After that, on the rabbit. After finally on the human. So can you see? It has to go through one by one. I can't directly go and test it on the human because sometimes if he's dead, obviously I'm behind bars, right? So that is why it is a process, right? This is an indication of process. This is an indication of process, right? We cannot take admin and finance to be process, right? We cannot take admin and finance to be process because this is a rule, and also you all cannot control, right? You all cannot control them, right? Sometimes that can be outsourced. Sometimes admin and finances are outsourced, right? So that's what you all cannot take it as your group's process. Okay. Finally, or one before the last, right? Now I need to the one before the last, right? In IFRS 3, there is something called as a concentration test, right? There is something called as the concentration test, right? Concentration test is not mandatory, it's optional, right? It is optional. Concentration test is not mandatory, it is optional. Okay. For some businesses, it's very hard to determine whether they are a business or not. Whether they are a business or not, it is very hard to tell, right? So after putting this input process output, right, we were not able to identify if it's a business or not, right? So second step would be is we can use the concentration test, right? If we are not able, again, let me tell you all, if we are not able to identify it is a business by looking at input process output, right? We can use something called as a concentration test, which is optional. Okay. Which is optional. Okay. It is optional. What does the test say? What does the test say? What does the test say? If the concentration is met, right? If the concentration test is met, right? If the concentration test is met, this is not a business. This is not a business. If that concentration test is satisfied, right? If it's satisfied or met, this is not a business, right? That is what it says. Okay, that is what it says. If the concentration test is satisfied or if they are met, it is not a business. Okay. So what is a concentration test? What is a concentration test? Here it is. What is a concentration test? Is here it is. For example, right? Let me first Read this, and after it, I've drawn some examples. I'll explain to you. I'll explain. If the fair value, right? If the fair value, if the fair value of a asset, of a single asset or a group of similar assets, right? If the fair value of a single asset or a group of assets, a group of similar assets, right? This is not an acquisition of business, right? But rather, this would be purchase. This would be needed to consider as a purchase of non-current asset. So you all would not understand. You all would not understand. Let me explain. Let me explain through examples. Let me explain examples. Okay. So what do I mean is, if my fair value, guys, if my fair value, right, is based on a single asset, right? For example, let me take vehicles, right? My assets. I have gone and bought a vehicle lot, right? I have gone and bought a vehicle lot, right? That vehicle sale does not have a process, does not have inputs, does not have outputs. It just simply has only the similar type of assets, right? It has a Mercedes car, it has a BMW, it has a Toyota, right? It does not have a warehouse, right? It does not have employees within it. Uh, it does not have a security guard. Neither it does not have a process, right? It's just simply the entire fair value. The entire fair value is focused on a single asset, right? It is focused on a single asset. Okay. Like these kind of situations, when you all are focusing on a single asset, these are not known as a business, right? These are not known as a business. What do you all call them? You all can simply call them as purchase of non-current asset. You all can call them simply as purchase of non-current asset, right? You all can call them simply purchase of non-current asset. Okay. Another example. That would be example two, right? Example two. What does example two says? For example, you all have airline business, right? You all might be having multiple types of resources. That means your fair value is spreaded, right? Not focused towards one asset, right? Okay. That means your fair value is spreaded, guys. It is not towards one asset. Can you see here? It's not towards only vehicles, right? In a airline business, you all have planes, right? You all need to park the planes. They have hangars or terminals, right? You all have machineries, right? Machineries. You all know where we go and put our luggages, hand luggages, right? They use a conveyor belt. That one. So can you see? I'm using multiple assets here. So let me say, for example, let me say the plane costs 150 million, the terminal costs 500 million, the machinery costs 250 million. Can you see? I'm having not similar type of assets. Plane is a different asset, terminal is land, machinery is it's a different sort of asset. So can you see, my fair values are not only based on a single asset, or it's not a similar asset, it is different type of assets, right? Another business, let me take another example. Textile business. When I take textile business, if my entire textile business is based on only clothes, right, or only cotton wool, right, that is not considered as a business. That is not considered as a business, right? If I need to consider it as a business, I need to have clothes, right, or I need to have cotton wool, right? I need to have something as cotton wool. I need to have factory. Where do I store those cotton wools? I need to have warehouse, right? How do I produce it? I need to have some labors. Can you see? My entire fair value, guys, is spreaded, right? My entire fair value is spreaded across different type of assets. Cotton wool is different. Factory is a fixed asset. Labor is a moving asset. Can you see? It's spreaded across the entire this one, right? Rather than staying in a single asset, I have spread it off, right? This is all that you all need to know in terms of concentration test, right? Concentration test. Please, for the people who have not read, go and read IFRS 3. Go and read IFRS 3. You all will be able to know what is concentration test. Concentration test is, rather than you concentrate on a particular single asset, right? If you all are concentrating on a particular single asset, right, that is not a business, right? That is not a business. It is simply known as purchase of non-current asset. If you all focus, if you all concentrate, right, if you all fix on a particular asset or a group of assets, right, that is known as concentration test, right? I'm marking that here it is, right? Refer to this, you all will be able to know. Look at this example. Look at this example. You all will be able to know what am I saying as concentration test, right? Obviously, the word also says, guys, the word also says concentration means never concentrate, never focus, never fix your assets on, sorry, your fair value on a single asset, right? Never concentrate your fair value on a single asset. Never concentrate your fair value on a single asset, right? If it's focused on a single asset, that is not a business, but it is just simply you all are purchasing a non-current asset, right? That would not be considered as a business. That is not going to be considered a business. Why? Your entire fair value is concentrated on a single asset, right? If that is so, that will be known as purchase of a non-current asset. Okay, never go and concentrate your entire fair value. Can you all see? Your entire fair value is spreaded in this case. Your entire fair value is spreaded in this case. So both of these two examples, textile business and the airline business, can be considered as business combinations, right? But my vehicle yard cannot be considered as business combination. Why? I have not spreaded my fair value. My fair value is only between similar class of assets. Mercedes-Benz, BMW, Toyota, right? These all you all need to know. These all you all need to know in terms of concentration test, right? If concentration test is made, it is not a business. Why? Because concentration test is the entire fair value is concentrated on a single type of asset. Okay, that is it. That is it. Okay. We are left now with last one. We are left now with last one. Now I need to relate it to the paragraph, right? You all can't always be giving general points, right? You all need to relate it to the paragraph, right? So what I would say is, based on the given scenario, we are able to comprehend that this is a business combination, right? This is a business combination, right? I'm able to now conclude, right? I'm giving a conclusion. Well, this is a business combination. Now I'm telling that this is a business combination, right? This is not a purchase of non-current asset, but simply this is a business combination. How? See, they have inputs. What is the input? License is an input, right? License is an input, right? License is an input, right? They do have a process as well, right? What is the process? Successful trials is a process, right? I told you all the monkey, the rabbit, and the human example. So they also have a process, and also they have an output, but that output is not still ready, right? That is no problem. I told you all. So there are some certain businesses, guys, they don't have output, right? But the scientists are confident of creating this drug. Okay, so right. So finally, we can conclude that this is a business combination rather than, sorry, rather than a purchase of non-current asset, right? Here I've mentioned it here, so I'm not writing it again. I just wrote it again. It's already mentioned here. I have given a conclusion, right? Here is a conclusion. Conclusion, right? With supportings, right? You all need to consider yourselves as what do you call analysis, right? If I'm giving a conclusion, I should need to be able to give some backup proofs, right? I need to give some proofs. I cannot just tell that this is a business combination by just speaking about these three general points. I need to relate it to the paragraph. I need to relate it to the paragraph so that examiner knows, well, this person knows how to determine whether it's a business combination or not, right? He knows what is input output process, right? Also, he knows how to relate. He knows how to find through this paragraph what is a input license, what is a process successful initial trials, and what is a output which is a medicine, right? Okay, that is it. That is it. And we're finally left off with skills and experience. All right, we're finally left off with skills and experience. Where simply, guys, they what again? Let me go for the requirement. Again, let me go for the requirement. Examiner wants me to tell whether can I treat it as a separate intangible asset. Can I treat it as a separate intangible asset? Right? You all know, right? Skills and experience, you all cannot touch it. You all cannot touch a skill. You all cannot touch an experience. These are hardcore. You all need to grab. These are soft skills, right? You all cannot touch. So that I'm giving you all a hint. That means if you all cannot touch those, right? If these don't have physical substance, these are IAS 38, right? IAS 38, intangible asset. But however, we cannot treat them as an intangible asset. Why? See, you all cannot you all cannot separate skills and experiences. You all cannot separate skills and experiences. Why? Because they are attached to the employees, guys. All right, they are attached to the employees. All right, they are attached to the employees. For example, see, this man, this man is working for a particular company. Okay, can I just go and sell off my skills and experience of that particular person? No, right? I need to transfer this person as well. I need to sell off the entire human being. I cannot only solely sell his skills and experience. No, I need to sell off the entire employee. I need to sell off the entire employee. Can I just go and transfer his skills and experience and keep the employee to myself? No, right? I cannot go and just keep the employee to myself. I need to sell him off with the entire skills and experience, right? So you all know, if I need to treat as a intangible asset, you all need to know something that is called as identifiable, right? Identifiable means it can be either sold separately or it can be you all can get rights through acquisition, right? You all can get rights through acquisition. Now, simply these assets cannot be sold separately, right? This cannot be split from the human. This cannot be split from the human who's part of the business, right? That is what I'm mentioning here. This cannot be sold or transferred separately, right? This cannot be sold or transferred separately, right? That is why it's not identifiable, guys. That is why it's not identifiable, right? That is why it is not identifiable. That is why it is not identifiable. That is why it is not identifiable, right? If I could separate the skills and the experience from my employee who's working part of my business, right, then I will obviously be able to sell it, right? I will obviously be able to sell it, so I don't have any problem. But see, because skills and experiences are non you those are like, you cannot separate them, right? I cannot treat them as IAS 38. If that is so, what do I need to treat them as? What do I need to treat them as? These will not be treated as a separate asset, right? These will not be treated as a separate asset, but rather will be categorized under goodwill calculation, right? Under goodwill calculation. How? They will be able to known as internally generated intangible assets, right? Internally generated intangible assets. Sorry, internally generated assets, not intangible, right? You all know, right? Now, in your individual financial statement, guys, please bear with me for another 2 minutes, please, please. You all know in your in your individual financial statements, you all have brands. right? But those brands you all don't show as assets. Why? Because they don't, you all cannot determine market value, right? But when you all are showing it as a group, you all can show it as internally generated brand. Why? Because you all get rights. You all get rights by acquiring, right? The simple step applies for this as well. The simple step applies for this as well. These are known as internally generated asset, right? These are known as internal generated as asset, right? These are known as internal generated asset, which will be done in your goodwill calculation, right? Right. Final point, guys. Final point, and we're done for the day. Final point, and we're done for the day, right? We can speak about whether this is also a business combination or not. This is also a business combination or not. Okay. Let me speak about that as well. Okay. Sorry, I have not even read the paragraph with you. Sorry. On 31st March, Lunaco acquired 100% of Eclipco. Okay. Fine. It was also decided that it is important to retain contracts, right? They are planning on not sending off the team of scientists. They want to sustain them. They want to keep them back, right? Why they want to keep them back? Because they have specialized knowledge and experience, right? Obviously, experience is valuable. Just imagine again going and training another employee, spending so much of money, so much of time, effort, all those are at waste. So rather than that, they want to retrain these employees. They want to retain these employees, right? Keep them again back in the company. Okay. Here, see, this is a tricky part. This is a tricky part, guys. This is a tricky part. Let me highlight it. Let me put a asterisk. This is a tricky part. The only asset recognized in individual financial statement is the license, right? Here it is, this license. This license, this license, they are telling that's the only asset, right? So obviously, when you all apply concentration test, what does it say? When your fair value is only based on one single asset, that is not a business, right? That is not a business. So when you all look at this, you all can say that now since the examiner is saying that only there is license as an asset, right? We will say that this does not meet concentration test. However, Lunaco estimated it was worth paying an extra 1.5 million, right? They are planning on paying extra 1.5 million, guys. 1.5 million is not small amount at all, right? In order to secure the skills and experience of the teams of scientists. So now you all can see, now you all can see, right? We are almost done. Don't worry, we are almost done. Now you all could see, right? You all don't have only license, right? License, license. You all have license plus 1.5 million worth of process or slash setup, right? Can you see? You all don't only have license because why? You all are planning on paying additional 1.5 million. You all are planning on paying additional 1.5 million for your set up of the process, right? Process mean what? Those laborers or those scientists, right? You all are planning on paying, right? So that's what I'm telling. Concentration test is not met, right? Concentration test is not met. Okay, why it's not met? Since there is a license, right? There is a license, one asset. Also, there is another one where my fair value I'm going to this one. Why? I'm paying 1.5 million is paid for the entire process, right? Hence, fair value is not only focused on license. So, right, it's not focused on license. So, this is a business combination, right? This is a business acquisition, right? If you all mention all of this, you all will be able to get marks, right? And finally, if you all want, right? See, this product is not still developed, right? This product is not still you cannot develop, right? Right? Or it's not still done, right? So since this is not developed, you will not be able to gain any economic economic benefits, right? So because of that, this cannot be cat this cannot be classified as what you cannot be classified as development expenditure, right? You cannot show this as an asset. You cannot show this as an asset. Why? Obviously this did not meet the this was not an intangible asset, right? So because it was not an intangible asset, you all cannot even classify this as development expenditure. Why? There is no output, right? There is no output, right? There is no output. So since rather what you all could show is, since they have not developed, these will be treated as R&D, right? These will be treated as R&D. This is it, guys. This is it, guys. This is it. So final, let me give you all a summary. Let me give you all a summary. Skills and experience, guys, because skills and experience, you all cannot show it as an intangible asset. Why? You all cannot separate it from the business, right? You all cannot separate it from the business, right? So why it's not identifiable? It's not identifiable. If you all need to show it as an intangible asset, you all need to meet the criteria. It should be non-physical substance. It should be identifiable, right? Identifiable means what? You all can be selling it separately, or you all get rights through acquisition. You all get rights through acquisition, right? But skills and experience, even though they are not, they are not, they don't have physical substance, they cannot be sold separately, right? So they are not intangible asset, right? They are not intangible asset. If they are not intangible asset, how do we treat them? If they are not intangible asset, we need to just show them under goodwill. We need to show them under goodwill, right? You all need to show them under goodwill, right? You all need to show them under goodwill. How? Hopefully I'll remember the concept of internally generated asset, right? Internal generated brand, right? Internally generated brand, right? Hopefully I'll remember. In individual statements, we don't show them. Why? Because we cannot value them. There is no far value. But when we are selling it to another company, we are showing them, right? That is what you all know as internal generated asset, right? Finally, we can say that the concentration test is not met. Why? Even though the paragraph says, right, that only license is the asset, right? They are paying another 1.5 million for the entire process of skills and experience, right? They are paying 1.5 million. So your fair value is not only focused on a single asset, which is the license. Your fair value is now being focused on license plus 1.5 million for the entire process. So that does not meet concentration test, right? So it is to be considered as a business combination. Finally, I'm concluding this session, right? Finally, right? Obviously, we have not developed the output, right? We have not developed the output, right? We don't have an output. If we don't have an output, there is no benefit. There is no economic benefit. There is no probable economic benefits, right? So you cannot classify it as development expenditures, right? You cannot capitalize, no capitalize, right? You cannot capitalize this, guys. Rather, what you all could do is you all could simply show it as treat it as an expense under research, right? You all can simply expense, right? Simply expense, right? This is it, guys. This is it. Okay, this is totally about this entire question that is related to Lunaco. I know this took a lot of time. I know this took a lot of time because I wanted to give you all a very good knowledge in terms of this. Hopefully, you all have understood, right? For the people who have doubts, you all can stay, right? You all can stay. Don't worry, your doubts will not be recorded. We can have one-on-one sessions, right? For the people who are scared to ask in front of the groups, no problem. We can have one-on-one sessions, right? I'll allocate another 30 marks. We can resume from this particular session itself. I'll off the recording, right? So for the rest of the people, right, you all could leave the session, no problem, right? Hope to see you all in the very next session, right? Stay safe, stay healthy, right? Uh, and start practicing, right? Start focusing on studies, right? Take it slow, okay? All the best. See you all. Okay, don't worry. I have to upload ethics. I'll make sure that is uploaded as well as this particular recording, right? Thanks for being with me. See you all then, right? For the other people, let me stop my recording. Let me stop my recording, and I'll take one by one. You all can unmute yourselves and speak.